everyone, and welcome to Global Equity Spotlight, Travel Edition, a series where we delve into interesting topics affecting global equity markets. Today I have Cornelius and Wesley with me, who have recently returned from a trip to Brazil. So let's kick off with some high-level facts about the economy.
So Brazil's a really interesting country. Firstly, very surprised with the scale of it. I mean, it's a country which is the largest in LATAM, over 200 million people. We saw that pretty much as we were flying into Sao Paulo, which is, funny enough, actually the largest city in the Southern Hemisphere, which is quite amazing.
And Americas.
And the Americas, which is quite amazing. In terms of GDP per capita point of view, it's around the mid-pack of all LATAM countries. So I think we did notice, coming from South Africa, especially the inequality gap there as well.
And what prompted the trip to Brazil?
Interest rates in Brazil is extremely high. They're one of the rare economies that haven't started lowering interest rates. So they're also sitting with 15% official rate, while inflation has trended down towards 4%, which is close to their 3% target. They have a 1.5% tolerance band around that 3%, so they are in that band at the moment. And if you look at their real rates, north of 10%, it really stands out versus other emerging markets. And if you look at the valuation of the market, it was very depressed at, say, 7 times. It has started to recover at the moment. It's now close to 11, but still a nice valuation gap versus emerging markets. And the market is really under-owned by local investors. Foreign investors have started buying the market, but we think there's very good opportunity.
Brilliant. Could you maybe unpack some of these themes that you saw on the ground?
So for me, there was 2 themes that stood out. So it was one, definitely financial inclusion. We saw that everywhere we went, whether it be the micro merchants or even the larger stores. That includes the POS devices we saw, or even like the Pix QR code. So they'll be at the micro merchants. You could just take your phone out and pay, which is quite remarkable. Another one was just generally the infrastructure build out. I think from a country in emerging market, that's something that always surprises you and amazes you. The one thing though is that there is need for maintenance. We got a lot of talk back and pushback about some of these buildings that didn't really look too healthy, but apparently were under renovation for a couple of years. Don't know how well that's going to work out, but yeah, that was 2 of the things that really stood out to me.
And yourself, Cornelius?
The green spaces were very nice. Wesley and I went for a jog almost every morning, and the one morning we went to one of the biggest parks, and we almost did a whole half marathon within the park and joined other running clubs. So that was nice within the concrete jungle. So that was very good. And then the prices of groceries really surprised me. I would say it's definitely 30% more expensive than in South Africa. They also have very high import tariffs, but I thought fresh goods, which they probably produce in Brazil, would be cheaper, but everything was more expensive. The only thing that was cheaper than in South Africa was the Havaiana sandals.
I hope you bought quite a few of those. So during your trip, you spent time visiting different companies' offices along with attending the JP Morgan conference, where you guys saw around 30 companies. Were there any highlights or interesting companies that stood out from that conference?
So we saw a lot of different companies within the conference itself, and we met with a lot of different management teams. For me, though, personally, one that really did stand out was that of Nubank. It's a company that really has pushed financial inclusion over the time, and they've grown around 40% CAGR in terms of total clients from 2019, which is pretty remarkable. Coming back and just switching it up a bit, for a South African context, it's very similar to that of Capitec, what they've done, very much pushing towards a lower income to middle class now, and really trying to push the barriers of financial inclusion, digital bank, lower cost to serve. So that was one standout for me.
Yeah, both of us actually met with them separately, and the stars are sort of aligning for them with interest rates that'll come down, that'll help their consumer. But there's also tax exemption on the LSM group that they typically serve. And their business that they are building out in Mexico is actually tracking ahead on all the KPIs versus where they tracked in Brazil when they started out. So that looks like a good one. We're still happy with our investment there. And then another one that might be interesting for SA investors is Raya Drogasol. It's like a pharmacy chain similar to Clicks or Dis-Chem, although I much prefer our selection that we have here. And it was really crazy how many pharmacies there are, but despite that, they are still rolling out stores, which I suppose makes me more bullish on the opportunity that our local pharmacies have in South Africa. If you look at Raya's market share, it has grown a lot over the last few years, from 9% closer to 16%, and they basically the same size as competitor number 2 to 5. And they're really consolidating the space, and they'll also benefit from GLP-1 generics coming out this year. But the valuation has run up hard, and it is a bit of a favorite under local investors. I attended their capital markets day, and there were more than 300 people in attendance. Anecdotally, I was the only English-speaking person that needed audio translation. But yeah, it's a stock the locals really like, and it has shown very impressive growth over the last 10 years or so.
Those sound like really interesting opportunities. So you guys have obviously come back with a lot of insights and new information. What are the key things to consider for this year moving forward?
I think from my side, it's definitely the political uncertainty. We've seen a rightward shift of all LATAM countries over the past year and a half in terms of where the elections have gone. For Brazil, though, they've got the elections starting in October this year, and it's a country where I didn't expect the political uncertainty to be that high. I mean, when we were at the conference chatting to local investors, it came up all the time, even with business executives themselves. Currently, the race is between that of Lula, the current incumbent, and then also Bolsonaro. When I say Bolsonaro, though, which is really interesting, is that his son is now running for presidency. That wasn't, to be honest, the most market-friendly option out there. When we were chatting to a lot of the business leaders, it was going to be that of the governor of Sao Paulo would have been their first pick. But we'll see how it plays out. It's very dynamic, very fluid. They saw some time for the elections to play out itself. So we'll see and track the polls closer to the time as well.
Yeah, it was actually our last day in Brazil together while we were in a meeting when the announcement came in that Bolsonaro is still in jail, would like his son to run, and the market dropped by 5%. But our stance is that if Lula, who's left-leaning, wins, it's just a continuation of the status quo. And just like South Africa, you are being rewarded with very high real returns already. But then you have asymmetric return if the election shifts to the right. But unfortunately, the companies are not doing anything about their cheap valuations at the moment. We did encourage them to do more buybacks at these levels, but they're still very nervous about the election. So I think that is a very key catalyst this year.
Wesley, Cornelius, thank you so much for your time today. And to the audience, thank you so much for joining.